What's up, guys? Hamilton here with the Trading Initiative. 2 videos in one day. How lucky are you guys? We are going to be going over a new trade idea that we have. We just posted our short thesis on the energy sector, specifically within OVV. That trade itself, check when the video is uploaded, check what the prices are on those spreads right now. Those things are up over 100% in one day. We took half off of the trade. The other half is going to be essentially free. We're going to continue to ride that thing down. But now there's zero risk of our account balance. The only thing that we're risking is unrealized profits, and that is a position that we love to be in as TTI traders. This next trade here is on Meta, and we are going long this time. Let me paint the picture here. First off, check out the screen right here. Sector year-to-date strength. Growth has held up remarkably well, considering the indexes have dropped. And the number one performing sector right now this year is communications, which just so happens to be a large part of Meta, right? Meta constitutes, I believe, 15 to 20% of that ETF. So to have that ETF outperform every other ETF on the year, I understand that something is going on with either Meta or Google. Google's up today, but Meta is setting up for a monster breakout. So here's the actual play. We got what we call a COD. It's also called an episodal pivot or a power earnings gap, where we get a huge gap up on earnings. It's up and over the 200-day moving average, which gives us the green light to be going long. We don't want to be buying things that are underneath the 200-day moving average. Now look at this. The market, for whatever reason, has said this is bad earnings. But remember, we don't care about the narrative. We build thesis based on the only thing that is decisively true: price. Price. The only thing that pays you at the end of the day is this. It's not your narrative. It's not what you want to happen. It's not what you think is going to happen. Is what is this thing actually trading for? Above the 200-day moving average, we want to green light this thing. And here we go. We gapped up into a COD setup. We're looking for a breakout above 191, 192, and we're getting it today. So as I said, this is our COD setup. This means change of direction in an extended downtrend all the way through 2022, almost to the beginning of 2023 before we got it bounced back up. And then all of a sudden, the sentiment in the stock completely changed. This is why we call it a change of direction. We want to buy this on a horizontal level break, and it just so happens that the market is giving us a cup and handle breakout. If you like cup and handle breakouts, there's your cup. There's your bull flag on the right-hand side of the cup, and here's the confirmation of the breakout. We're looking to trade this thing with a price target up near 230, 235, and this is exactly how we're looking to capture this. Go ahead and look on the screen. That is the Meta play. We are using the June 16th, 230, 235 call debit spreads as our vector of attack. That gives us 93 days worth of expiration on this play to get up near 230, 235. We're going to take half off at 100%, just like we did with OVV this morning. This allows us to stay in trades longer without risking capital that we have in our accounts, right? Just unrealized profits, which is what we want as TTI traders. Once again, 93 days till expiration, 230, 235 called debit spread. We grabbed it for $1 earlier today. We tweeted it out when we were doing it with a max profit of $4. That means there is a 4-to-1 risk to reward on this trade. That's something that we want to take every single time. Now, like I said, we like this thing above the horizontal level, 190, 191. We're looking to stop out. If this thing breaks back down below this horizontal level and starts trading, we want to break out of this trade. We want to stop out somewhere around 185, close those call debit spreads, get whatever we can get back from them. But as of right now, this looks like a solid breakout. I didn't mention this earlier, but bullish momentum. Look at this. The market does not want to sell Meta going all the way back to the beginning of December. I didn't mention this earlier, but a bullish momentum regime here on Meta. This thing has not been sold off going all the way back to November. I mean, the market does not want to sell Meta for whatever reason. It's not up for us to decide why the market doesn't want to sell it. It's just up for us as technical traders to focus on the setup, understand there's relative strength behind it, understand there is an applicable fractal that we can play, and understand that the only thing that pays us is price. So one more time, those June monthly contracts, 230, 235, grabbed them for $1 for a max profitability of $4 for a 4-to-1 setup. I hope this opens up some of your eyes. It all started with the XLC outperformance year to date. Everything starts from a macro standpoint inside of TTI, and then we whittle down to find the strongest stocks within the market. Guys, if you like this type of stuff, please like, subscribe. Let me know what you think. It really motivates me to make these videos. I hope you guys learned something, and I'll catch you in the next video.